Give you the markets update now. The JSE looking set to contend with significant pressure from global markets this morning as investors digest the earnings reports that point to a deteriorating global economy. Domestic focus is squarely on the Reserve Bank monetary policy announcement, which will be made later today. Let's get market expectations now on that rates decision. Makwe Masilela is Chief Investment Officer and founder at Makwe Fund Managers. Dr. Masilela, always a pleasure talking to you, sir. Give us a sense of how the markets have opened this morning ahead of that all-important announcement around the interest rates.
Morning, Tolly, to you and to the listeners. Nothing good about the morning because it's all in the red. Following what happened yesterday with the U.S. markets, we opened down more than 1%, and all because market participants are seriously worried about economic growth outlook and whether this increasing interest rates will be done in such a way that it doesn't trigger recession. And so far, markets are buying the story that there might be some slowdown when it comes to the economic growth, and also the comments that we get from the real central bankers telling us that, listen, we'll do whatever it takes to tame or fight this inflation, meaning that they will continue to increase interest rates. So that didn't bode well for the markets. Totally, just quickly, inflation, all it does, it starts eating into the profits of companies, and also it makes people to start affording less because your rent or your currency starts buying less.
We're going to talk about inflation in a moment, Dr. Masilela. I see you are preempting that conversation already. But let's start with the U.S. Federal Reserve, which recently announced a 50 basis points hike in interest rates from record lows. Can we expect that kind of same decision at the local front, with the Reserve Bank about to announce that decision later this afternoon?
Well, it is possible that they can try to get the 0.5% increase so that they continue to maintain the current interest rate differential between us and the U.S. so that we don't get to see the point where the rand start weakening much, compared to what it's been doing now. We've been seeing that the rand has been very volatile. So, but if they have now to consider the real economic impact and the slowdown of our economy and the CPI numbers that we got yesterday, I don't think it warrants them to try to make sure that they move in kind of a lockstep with the U.S. Central Bank. Let them give us our quarter basis point increase when it comes to interest rate hikes. But that 0.5% is possible.
Yeah, still on the Reserve Bank, what have been their projections around inflation? And I'm raising the inflation question deliberately, Mr. Masilela, because the UK is also dealing with the exact same problem. In fact, there are suggestions that we are importing this inflation to our shores.
Definitely we are importing that inflation for the fact that the rand is weak, for the fact that most of the South Africa itself is a net importer, and we know that things are priced in dollars. So the minute the rand starts to weaken, then it means we start paying more for whatever that we're getting. And I think out of our imports, oil itself makes almost more than 30% thereof. And we've seen what has been happening with oil prices. So definitely we are importing that. And this inflation is not just a South African or UK issue. This is just a global monster that central bankers are trying to fight it. But unfortunately, most central bankers are behind the curve, and they might end up increasing rates rapidly, as we've seen with the US. Instead of doing a quarter basis point, they're talking 0.5%. Back home here, we just mentioned it, that there is a possibility that we can also, instead of doing a 0.25%, we might do 0.5%, because people are trying to catch up because they've been behind the curve. They thought that inflation was temporary, but unfortunately it's not.
Yeah, let's talk company news, therefore. Construction companies here, Stefanuti Stocks, WBHO, Avenge, they've agreed to settle the long-standing multi-million rand civil damages claim against them by the city of Cape Town. Talk us through those developments.
We need to remember the guys didn't admit that they've done anything wrong. They said, listen, let's just settle this because we want to move forward, But yes, at some point, the guys have to agree to that settlement. It all emanates from what has been happening with the World Cup in 2010, that the guys who have been managed to be found that they've been doing things the wrong way, they've not been very competitive. Then the competition tribunal fined them. So on the back of that, the city of Cape Town also lost their claim against them, particularly for that stadium in Cape Town. So the guys ultimately agreed that, listen, let's pay almost 31.5 million. I think they will pay that over a period of 3 years. So that itself, it shows you that people can get away with murder, because now here they are, they're just paying the fine. And by all means, guys can afford to pay that kind of a fine. And now what does it say to people with deep pockets? That go ahead to do whatever that you need to do, and probably will say to you, are too big to fail, then you just pay a penalty. And we've seen that also happening when it comes to the banking institutions as well. But the fact of the matter is that it's all because of what has been happening with the 2010 World Cup.
Yeah, and we all remember that conversation very well, don't we? The prices there that were inflated, it was said. Let's conclude the conversation with Massmart publishing its sales update for the 19-week period, which ended on 8 May 2022, and the Competition Commission update. What's happening here, Mr. Masilela?
It's very interesting, and I think these are interesting times because, number one, we know that we've got consumers who've been struggling. We know that people have been complaining, and people have just wised up that they've got the right and know where to go when they've got issues. But you look at their sales, they were down 0.2%. But if you look at like for likes, sales were up 2.3%, meaning the other sales numbers is because there are stores which have been affected by the unrest. Take the Pietermaritzburg store, has not yet been opened, and also the guys had to deal with the product and the materials or the supply chain cost, which managed to go up. I mean, the sales inflation at almost 3.6%. That's not good news. But we've seen that when it comes to food and liquor, it's been recovering very well. Games still struggling. And when you look at the Builders Warehouse, the guys' sales were down almost 3.9%, and all because it's coming from a very strong base from 2021. Remember, during the lockdowns, people were spending and improving their work or study environment. So they've done and completed all that. There's no need for them to continue to shop around that. Hence, Builders Warehouse is not doing that great. But apparently, the guys managed to increase their market share.
Very interesting developments indeed. Thank you very much for that markets update. Makwe Masilela, Chief Investment Officer and founder of Makwe Fund Managers.